Hello, dear students. So today here we are going to discuss the entire review, or maybe the paper that has happened today, Auditing and Code of Ethics. Okay, the basic focus will be on the MCQ question discussion, and then we'll take up the questions also for descriptive ones to see whether you have attempted them properly or not. First of all, I would like to give understanding regarding the kind of paper. So this we cannot say is a very difficult paper, and obviously because it is our examination, we cannot call it to be easy as well. But then yes, the areas that they have picked were quite predictable. So when we were preparing, okay, that time every time the highlighted areas are the one which have been picked up as the question. I'm feeling very happy today because the compiler, the question bank which we have shared, I think many questions have been come from there. So basically there has been a repetitive kind of question or something which you could connect and understand. Questions are not difficult, they are understandable, and they have not made it very complicated except for one or two where content would not be a problem, only interpretation would be a problem. Like you had to understand the question correctly. If that also you have done correctly, then I think the paper would be a below average one. You cannot call it to be very tough with a decent preparation of audit. And I'm very happy that the previous examination also the audit paper was, moderate one. And now also we have got something which a student can manage. Very simple idea. That is when you are thorough with your concepts, if you know the standards properly, if you know CARO reporting properly, if company audit some parts you have done it very well, okay, then I think this paper, for example, we talk about ethics, okay, regarding threats. And I was very sure that I'd also told you during my class hours that this kind of questions are very sure to be asked. So basically, if you're conceptually very strong, okay, then this paper was manageable. Okay, so I would attribute it to be one of the moderate papers, manageable, and the theoretical content which has come, that also is not difficult. Okay, that with a decent preparation, with coverage of every topic, if you have done properly, I think you'll be able to manage. I always tell one thing that when it comes to professional papers, there is nothing called as optional preparation, nothing called as selective preparation. So whenever any student questions me, which are the important topics to be done, which are the areas that we have to focus, I always tell only one thing. When you're into a professional course, selective preparation is not the idea. And today I have proved my point because you see in this paper, which we are going to discuss now, every single area has got tested. From the first chapter to the last one, chapter 1 to chapter 11, every single chapter's emphasis is there. You talk about subsequent event, it is there. You talk about CARO, it is there. You talk about audit program, it is there. Audit strategy, it is there. Documentation, it is there. Written representation, it is there. Going concern, it is there. Threats to independence, it is there. Quality control, that is also there. So basically, tell me now, can you actually make a list of what is important or what is less important? Understanding is no. And we are going to be auditors. So because of that, selective preparation is not going to be an idea. Okay. So I would again keep up my same point. Then in a paper like this, or basically any paper for that matter, never discuss or never think about some important questions or some important areas to be focused upon for the exam. The entire syllabus is important, and understanding and conceptual clarity is the crux for everything. Okay, theory, obviously you can't remember everything, but concepts, when you understand, obviously you can remember everything. And today's paper is a clear indication that conceptual clarity has been tested, and they have picked up on simplest things. Very simple things have been questioned, because what happens, students' understanding is they go into the core part of it, detail of it, the difficult areas they try to cover, but simple parts are missed upon. And today's paper, basically speaking, which I really liked about in today's paper, is the basic auditing aspects have been checked. The basic auditing principles, like they're focused on the fundamental principle. They're focused upon the concept of confidentiality, audit documentation, which we focus more on all the other heavier areas, and these parts we ignore. So basically, understand from the scratch till the end, I would say everything is important. Okay. So with this backdrop and with an understanding of, with a decent preparation, you could manage this. Let us now get started with the discussion. First, we'll take all the MCQs, which according to me, the case study given is very beautifully drafted. And with that, a lot of hint has already been given. So answering is not going to be difficult. Yes, one or two questions are tricky, where the key is your concept. If you know the concept behind it, I think you'll be able to handle it. All right. And then we'll have a quick glance of all the descriptive, where I'll give you a crux of every answer, what was expected, what reference was required. And with that, you will have a solid understanding of how you have written your paper. All right. So let us get started. I will share the screen with you, and we'll begin with the MCQ discussion first. All right, so let's get started. So first we have the case scenario 1. Okay, let's have a quick glance over the MCQ given here, the case study given here. So we have a GHB Limited, a listed company having registered office at New Delhi. It is in the business of blending, processing, packaging, and selling various brands of tea. BPP and Associate Company, LLP Chartered Accountants are appointed as statutory auditor of the company for the financial year 23-24. CAB is the engagement partner for the assignment. Okay. So all these terms you're very familiar with. Okay. The company has centralized warehouse near the border of Himachal Pradesh. CAB's attendance on 31st March 24 at the physical inventory counting in respect of the said warehouse became impracticable on the account of natural calamity in that area. Himachal Pradesh, natural calamity. So it is not possible for you to reach for the physical count. It also became impossible for CAB to perform alternative audit procedure to obtain sufficient appropriate audit evidence regarding the existence and condition of inventory. The company had spent a huge amount on employee benefit. Hence, CAB instructed his assistants to test the controls in that area to set around again the employee benefit. Obviously, because it's a material item, controls testing is very important. After being satisfied with the controls maintained by the company, he instructed his team to bifurcate the employee benefit expenses into salaries and wages, contribution to provident fund, expenses on ESOP, ESPP, and staff welfare expenses. So how they have done the bifurcation of all of that. The engagement partner CAB, while evaluating, validating, and reporting on the design and efficiency of the internal financial controls, IFC, at GHP Limited, also impressed upon the directors, independent directors, and the audit committee the way in which Companies Act 2013 had placed a greater emphasis on the effective implementation and reporting and internal controls of the company. If you have heard the lecture properly, this area I had told you is extremely important when it comes to internal control topic, where we had the section 177, 134 subsection 3, 149. Okay, all of these where audit committee, directors, independent directors had responsibility towards IFC. Correct? Okay, so that is the highlight area here. As discussed, it is picked upon now. Okay, then after that, due to the time constraints, CAB is under the pressure to issue a clean report in the limited time frame. He has insufficient time to properly perform or complete the relevant duties and issue appropriate audit report. So he's having lack of time. Okay, there's no time available, but in a hurry, he's signing what? A clean audit report. The board of directors wants CAB to certify the debtors to be sent to the bank without checking. CAB agrees, as most of the professional income of BPP and company LLP comes from GHP Limited. So they are agreeing to whatever the management is telling because they are depending on their fees majorly. They have undue dependence on the fees from the GHP Limited. Hence, they are concerned about losing the engagement. Okay, all right. Based on the above facts, answer the following. So they have given a very simple case study. Okay, let's pick up on the discussion. Since it became impracticable for CAB on 31st March 24 to attend the physical inventory count, as soon as you read about physical inventory count for your presence, you should come across the SA 501, which talks about audit consideration relating to selected items. Okay, specific consideration related to selected items, audit evidence when we discuss. Correct. So SA 501, audit evidence, specific consideration for selected items. The first thing that you pick about is inventory, condition and existence. There we study that you have to check for the physical verification as on 31st March. There we study variety of situations. One of the situation is where it is impracticable for you to attend. So in that case, you have to perform alternative audit procedure. If that also is not possible, the auditor will look into the impact of modifying his opinion, obviously after discussion with the management. So that idea you have. So based on that, look at this. Since it became impracticable for CAB on 31st March 2024 to attend the physical inventory counting at the warehouse, and also became impossible to perform alternative audit procedure to obtain sufficient appropriate audit evidence regarding existence and the condition of inventory, CAB shall. So what will CAB do? Take management representation regarding the existence and valuation of inventory and mention in EOM paragraph? No. Rely on GSB's perpetual inventory record as audit evidence? Absolutely not. Internal audit evidences are not reliable. Omit altogether the audit procedure physical inventory, then you're going to breach the SA because compulsory obtaining evidence regarding inventory is important. Finally, they say modify the opinion in the auditor's report in accordance with SA 705 as it is scope on limitation. So the answer would be D here because you're not able to attend, neither you're getting a possibility of performing alternate audit evidences. So basically, it is a limitation on your scope. This will end up giving you a modified opinion. So the answer here has to be D. Okay, then moving on to the next one. Which assertion concerning the bifurcation of employee expenses into various heads is being verified by CAB? Okay, now they're telling this employee expenses have to be properly bifurcated. It's a material item. It has to be properly bifurcated. So everything has to be properly classified. Okay, but because classification has not been given here, understand bifurcation is because they want to check whether disclosure requirements have been done correctly or not. They cannot club all the expenses together. So they have to be properly bifurcated, means presentation has to be done correctly. That is nothing but they are validating the assertion of disclosure. Occurrence cannot be here because they're not checking for whether it occurred during the period. Measurement, valuation is not what they're checking. Completeness is not because everything required for the year is taken off. No. So basically here the appropriate answer is because of the bifurcation given as disclosure. Okay, then. After that comes the third one. With reference to reporting on the internal financial control system under the Companies Act 2013, which of the following does not fall within the responsibility of GHP? For this, you have to remember the discussion. We have had it in detail regarding IFC. 177 requires audit committee to give a evaluation of it and mention about the adequacy. 149 subsection 6 talks about the independent directors also should give a report regarding the robust mechanism of the internal financial controls. Plus, we also know in director's responsibility statement 134.3 that the directors have to give about what? Adequacy of the internal financial controls. Correct? So now which is the answer here? Here they are saying first is audit committee. This is correct. Director's responsibility statement correct. Nowhere we have studied directors have to appoint an expert to state that the internal financial controls. We are not saying they may not. They may hire the expert. But is it required by law? No. They are telling nature of responsibility means an obligation created by law. So that is not covered here. So A, B, and D are mandatory. C is an option to the company. It is not a responsibility. So the answer here, which is inappropriate, is they require to hire an expert to give an evaluation. That is wrong. The answer here would be C. Then comes to fourth one. Here there is a limitation on the timeline, and because of that, he has given a clean audit report. He's ready to sign off. Which fundamental principle governing professional ethics is disregarded by him? Now, we know that as an auditor, we are required to perform our duties with complete skill, perform all the audit procedures thoroughly, and then obtain the evidences, and then give the opinion. In haste, audit cannot be done. Incompletely, it cannot be done. Here, understand professional behavior is out of the scope because we don't talk about it here. Integrity, objectivity is getting compromised. We do agree because you're doing something wrong. Okay, dishonesty you're practicing, so it is integrity. Objectivity because you don't have evidences and you're giving conclusion. But the best suitable answer here would be professional competence and due care. Because under professional competence and due care, we have an understanding that auditor is required to act in a way that is able to understand the business correctly, and based on that, apply all the possible audit procedures to obtain sufficient appropriate audit evidences. So here what he's doing, he's trying to work in haste and close the audit without performing the required audit procedures. So is he professionally competent and taking due care in performing it? No. So the appropriate answer would be A. Though C and D is also getting compromised, but largely here the answer is what? A. So most appropriate answer we need to pick up here. So the answer will be A. Then, under dependence on the fees from GHB Limited creates which threat of independence? Now this we have done it in the class discussion when I taught you threat to independence. One of the examples only which I take for dependency on the fees is when I teach you self-interest threat. One of the examples that I've taken in the class itself is where you are dependent heavily on one client for the fees. Like 80% of the entire revenue that you are generating as a firm is coming from one client. So if the client goes, your business also could come down or close also for that matter. So you have a threat of losing him. If I lose, I would lose money. So don't you think your interest is developed? Yes, because of which you'll compromise your objectivity? Yes, and because of that, we say here it is obviously not intimidation, not familiarity, not advocacy. It is going to be self-interest threat. Okay, so the answer here is self-interest. Okay, so you can see here all these answers. The first one is going to be D. Second is going to be D. Third is going to be C. Fourth will be A. And fifth is going to be C. Okay, these are the appropriate answers. All right, then. Moving on to the next one. Okay, case scenario 2 we have. Mrs. Christian Company is a firm of chartered accountants based in Punjab. CAK, CAR, CAI, and CASH are the partners of the firm. So they have mentioned 4 partners. The firm is engaged in the various audit assignments. The engagement partner who were handling their respective assignments for the financial year 23-24 deals with the following issues raised during the course of the respective audits. So they have divided the work among themselves and they are taking care of respective assignments. So Messrs. Christian Company is appointed as the joint auditor along with Messrs. PK and Associates and Messrs. RS and Associates for the audit of large manufacturing company. So you have the idea of SA 299, responsibility of the joint auditor, where on the accountability of large audit firms, we know that they will appoint more than one audit firm to complete the audit. So this is a case of joint audit. CAK is in charge of this audit. They have divided their audit areas and have also identified common audit areas, which will be applicable to all joint auditors. While forming the opinion, CAK has different opinion, whereas other two audit firms share the same opinion. Both of them contended that as they were forming a majority, Mrs. Christian Company will have to agree with their opinion. Don't you think it's a serious discussion that we do as per SA 299? I am very sure if you have gone through even the summary of SA 299, I've picked up this very clearly, that if there is a difference of opinion, there is nothing called as majority. Every auditor is independent. Every auditor is required to comply with fundamental principles. So if he does not agree to this, what he has to do? He has to come up with a separate audit report. And both of these audit reports, one coming from the two partners and one coming from individual, will have a paragraph called as other matter paragraph. And in this other matter paragraph, reference to the others report has to be given. So majority or forcing him or making him agree, all of that cannot work. All three auditors are going to be independent. Even if one is having a difference of opinion, he has all the right to come up with a different audit report, but both of them should include other matter paragraph giving reference to each other's audit report. Because that is nothing but as per SA 706, other matter paragraph has to be included if you want to user to know about your audit. Correct? So that is the requirement. So that is the idea. I'm very sure one question will be on this because they're telling you difference of opinion is there. Next one, CAR is conducting the statutory audit of Power Limited. He observed that during the year, company has issued shares at premium, okay, and has transferred the amount received as premium to securities premium account. He wants to ensure Power Limited utilize the amount available in the securities premium for the purpose permitted under the Companies Act. I just recently remember somebody posting on the forum that what would be the important areas from corporate law to be covered for the audit paper. And that I very specifically had mentioned that topics from share capital like 52, 53, 54. Okay, these are very important areas could be tested in audit. And there it is. We have section 52 being picked up. Okay, so they're talking about utilization of SPR, Securities Premium Reserve. Okay, then. Registrar of the Cooperative Societies is appointed Mrs. Christian Company as the statutory auditor of Nand Cooperative Society for the financial year 23-24. CAI is looking after the audit of the said registered society. During the year, in terms of Section 34 of the Cooperative Societies Act, with the sanction of the registrar, society has contributed for the charitable purpose as defined in Section 2 of the Charitable Endowment Act 1890. CAI is ensuring whether requirement as regards contribution made have been complied with. So, you know, in case of cooperative society, we study a systematical contribution where you have to transfer some amount first to the reserve fund. And after that remaining amount, what is there? From that some amount only you'll be allowed to transfer to charitable, where we know 10% of the net profit after you have transferred to the reserve fund, what amount is required. That only can be going to where? Charitable purpose. That is given in Section 2. Okay, so that requirement you have to check. Then all the engagement partners and the audit team of Mrs. Christian Company have deliberations and discussions every week through Google Meet to review the progress of their respective assignments. During the last such meet, CASH, the managing partner, briefed the team about the form, content, and the extent of the audit documentation in terms of SA 230, while citing examples of the records to be excluded as well as the records to be included as a part of audit documentation. So reference to SA 230 regarding what should be included and what can be excluded. Okay. So now we have got a thorough understanding about different assignments they have taken up and what each partner has played a role in. Based on the above, answer the following questions. In the difference of opinion between joint auditors, what course of action can be made? Okay, so already I told you this kind of question only would be there. So they will have to agree with the majority, absolutely wrong. They will have to agree with the opinion formed by majority and including EOM, wrong. Because EOM has nothing to do with auditor's opinion. EOM is regarding the matter of financial statement. They can add a separate audit opinion paragraph in the common audit report. No, there cannot be additional content in the existing audit report. So obviously the answer is going to be D. They can issue a separate audit report and the audit report issued by the joint auditors shall make reference to each other's audit report. And you also have the additional knowledge that one paragraph will be introduced as per SA 706, which we call it to be other matter paragraph. And in this other matter paragraph, you have to give the reference to that other auditor's report. Clear? Yes. Moving on to the next one. The securities premium account of Power Limited cannot be applied for the following. So you should remember 52, and I would highly recommend that in these kind of questions, don't look at the option only. You know 52 utilized, 52 says SPR can be utilized where all. So based on that, first you bring that answer in your mind, and then you'll realize, okay, where it is not useful. So fully paid up bonus says yes. Buyback of securities, yes. Okay, commission payable on the discount on the issue of any equity shares, yes. So ultimately here they're telling writing off of debit balance in P&L. That will not be allowed. So this was very simple one if you have the good knowledge of securities premium. So the answer is A. In writing off debit balance in P&L account. Remaining B, C, D are allowed as per section 52. Then 8th, CAI, who is in charge of the audit of non-cooperative society, wants to ensure that society has contributed for charitable purpose within with limits prescribed. How much? So without reading the options, how much are they allowed? First, you have to transfer to reserve fund, and then the surplus remaining. Okay, of that net profit you have to consider, and 10% of it. So the option will be contribute an amount not exceeding 10% of the net profit remaining after compulsory transfer to reserve. I think the first answer is correct. Class of society doesn't make difference here. 20% is wrong. Prescribed percentage wrong. Answer is A. Contribute an amount not exceeding 10% of the net profit, but after remaining compulsory transfer to reserve fund. Answer is A. 9th one, which of the following need not be included by the audit term as the part of audit documentation during handling of their respective assignments? Okay, can you think about and give the answer here? Okay, I'll just check if the questions are there live. Just give me a second. Okay. So, all right. So the answer here, just 1 second. Is there any question which I can read here? Yeah, I would recommend that students give the answer for this. Let's see if you can give the answer. Okay. All right. So now you tell me significant and specific contracts and agreements. Will it be a part of the documentation? The answer is yes. Draft audit engagement letter. Summaries of significant matters. Obviously, no doubt you have. Checklist is going to be a part of documentation because you should understand how much is work allotted, how much is work completed. So basically, your draft audit engagement letter will not be a part of the documentation. The reason for this would be basically it's a formal agreement entered before the engagement is started. Okay, undoubtedly in the final audit documentation, it will be a part of it. The engagement letter will be a part, but draft engagement letter will not be a part of documentation. So here obviously A, C, and D are appropriate, but B is the wrong one. Okay, so does not include is the question, right? Yes. Not to be included will be 1 second, will be this, because formal agreement it is before the engagement starts. So in the final audit documentation, the final engagement letter will be there, but draft engagement letter, no. So these three obviously will have their place, but this is the wrong one. Okay, so that is a clear one. Okay. Now moving on further, let's take the case scenario 3. Mega Power Limited is a manufacturer of solar lanterns which are used in remote villages where there is no reliable supply of electricity. However, due to power projects undertaken by the government, the demand for their solar lanterns has significantly declined over the past few years. See, whenever you get this decline in all words, you should understand going concern is the next hint. Because when they talk about negative side, in audit, usually they hint upon what? Going concern. The company was in need of 2 crores for working capital and other expenses, but was not able to find this amount. Consequently, their suppliers were paid much later than the usual, and hence some of them withdrew their credit terms, meaning company has to now pay cash on delivery. This created severe cash crunch, and the auditor feels that other than the cash crunch, there are also several other financial indicators that cast a significant doubt on the entity's ability to continue as going concern. I told you, when they talk about negative, it is understood it is they're picking up on what? Going concern. Okay, then after that, the management of the company, however, assures the auditor that this is temporary and the situation will change soon as they are planning to diversify their business. So they have a backup plan or a mitigation plan which is ready. They are ready to provide written representation for the same. The auditor feels that material uncertainty still is existing. The auditor wants the management to make adequate disclosure about this in the financial statement. So everything about 570 should start flashing in your mind. The auditor wants to include a separate section about this in his audit report. He's allowed. He's also contemplating about the kind of audit report that has to be issued. So whether modified or unmodified, depending upon whether management is doing the needful or not. The auditor has concerns about ethical values and diligence of the management. So they don't believe management is trustworthy. He's concerned about the reliability of the representation made by the management and the audit evidence in general. So basically, whatever evidences you have obtained internally, you don't have trust on it. The auditor is of the opinion that written representation from the management are not reliable. Okay. So based on the above, answer the following. Very short case studies have been given. Okay. So quickly you can take a glance of it and start with the MCQ. So don't have to spend much time on understanding the case scenario. And I always recommend first you have to go through the questions and then read it so that you'll understand exactly for your question which part will be relevant. Okay. Now, financial events or condition that may cast a significant doubt on the entity's ability to continue as going concern does not include. So question is, which of the following four are not financial indicators for the company's ability to continue as a going concern? Now, inability to comply with terms. First of all, financial indicators means you're not able to fulfill your payments. You're not able to make the payments on time. There is cash crunch. Okay, financial liquidity is not there. That is considered to be financial indicator. So inability to comply with terms of loan agreement, obviously, yes. So maybe interest you're not paying on time, EMIs are due and you're not making the payment. So obviously you're not able to fulfill the loan terms and conditions. So financially you've gone down. So it's a financial indicator. Inability to pay the creditors, again, payment. Financially, it's an indicator. Shortage of important supplies. Now, when you talk about shortage of important supplies, if you compare all the four, C could be not the most appropriate one. See, shortage of important supply, obviously, if you don't have a supply, you'll not be able to produce. So production will not happen. So revenue will not happen. So indirectly, what will happen? There is going to be a loss and there is going to be a financial loss. But directly, it is not attributable. If you look at the four options, all the three other options are directly financial indicators. Shortage of important supplies is not directly, it is indirectly. So here the question is about financial events. So you would say here, the most appropriate incorrect answer here would be which? Shortage of important supplies. Though indirectly it is going to impact the financials, but directly it has an impact. No. A, B, and D is having direct impact, but C is not having. That is the idea. So obviously you're the most appropriate if you have to pick up, then I would say C. However, C also is indirect financial impact, but all the three are most appropriate here. So C will be picked up on. What kind of audit report will the auditor issue? What kind of audit report will the auditor issue if the use of going concern basis of accounting is appropriate, but material uncertainty exists and adequate disclosure of the material uncertainty is made in the financial statement? So now tell me there is a material uncertainty. Auditor spoke to the management. Management is ready to make the disclosure, but uncertainty is still there as per the auditor's understanding. So obviously the management has done appropriately everything. So we'll come up with unmodified opinion only. But then in the unmodified opinion, we are going to have one section called as uncertainties connected to going concern, and then we can give the uncertainty. We have a separate section. So here they're not talking about the reporting requirement. The only thing is what kind of opinion. Answer would be unmodified opinion because management has disclosed appropriately. Correct? So it has been properly disclosed because what is audit? Whether true and fair view of the state of affairs of the company. So however it is going on, are they reflecting true and fairly? Yes. We are not judging whether company is doing good business or bad business. We are not understanding about business. We are understanding about what they have reported. Is it correct or not? About the situation, what it is, good or bad, that we are not concerned. But what they have presented, is that correct? That is what a call is. So what is presented and what is correct, is it same? Yes. So because of that, we are going to give unmodified report. Next, if the auditor is of the opinion that the written representation are not reliable, what kind of audit opinion should be issued? So here understand written representation not reliable means you have a doubt on the integrity. And if you have a doubt on integrity, unmodified opinion obviously cannot come. Unmodified opinion, both the, see, other matter, emphasis of matter, all this will not work out here. Answer should be A or B. So disclaimer of opinion, adverse opinion. If you look in the context of this particular question, everything is pertaining going concern. So going concern means what? That it is having a pervasive impact on the financial statements. So if you are not getting written representation, it is as good as the inability of the auditor to obtain sufficient appropriate evidence. And the impact of this is going to be significant, material. And because of that, we consider it to be what? A disclaimer of opinion. Because the possible impact is going to be both material as well as pervasive. Because going concern, no? We see whether it is impacting a specific element or it has a pervasive impact on the overall financials. Going concern will have an overall financials, right? So because of that, your disclaimer of opinion is correct. Adverse is not correct. Okay? So C and D, and obviously not. So out of all the four, if they would have given qualified, then you have a doubt because specific and pervasive. But since qualified is not given, only the answer is A here. Adverse, no. Next, 13th one. Messrs. D, E, and F and associates have been appointed as the auditor of JKL Limited for the first time. That's the next question altogether, okay? For the financial year 24-25, the engagement partner CAD is briefing his engagement team about the need of engagement standards and quality control standards in the area of financial statement audit and in other types of assurance service. Out of the following, which of the one is not correct about why standards are needed? So engagement standards are all the SAs, quality control standards are the SQCs. So when he's briefing about them, what is he trying to portray actually? So the idea is standard equip professional accountant with professional knowledge and skill. Okay. Standard ensure audit quality. That is correct. Standards promote uniformity. Obviously correct. We require standards because every auditor has to perform audit in the similar manner so that the stakeholders will be able to make sense out of it. Comparable. Standards ensure carrying out of audit against established benchmark as per the local practice. Yes. So B, C, and D are correct. So the answer is A here. Oh, okay. The understanding is very simple. Standards will not give you knowledge. Standards are not going to give skill. The skill set and knowledge is developed by what? Educational training. So the study that you're doing now, that is going to give you the professional knowledge and skill. So standards and all the criteria is not to increase your knowledge, is the applicability of that knowledge. For what? Increasing quality, uniformity, and matching the standards. So the answer here, which is inappropriate, is standards will equip the professional accountants with knowledge and skill. No. For knowledge and skill, we have the professional education and training going on. Okay, that is required for knowledge and skill. All the three will be, others will be for what? Engagement standards and audit standards. Answer is A here. Okay, this is very simple question. RDB and company have been appointed as a statutory auditor of INE Group of Hotels. This is the first time the firm is auditing an industry in food and beverages. The engagement partner CAR and the other key members of the engagement team have undertaken activity of development of audit plan of INE Hotels after thorough understanding of the hotel's business and its environment. So they've understood the entity, its environment, and now they're doing the audit plan. As per 300, description of which of the following matters is not a part of developing audit plan. I don't think so. We read the option. Just remember the discussion of SA 300. In audit plan, we first have NTE of RAP, NTE of FAP, and all the other procedures that are required as per the other standards. Correct? So NTE of RAP, correct? NTE of further audit procedures, correct? Resources necessary, we don't do it here. Okay, so no, the answer will be other plan procedure also is correct. So A, B, and C, D is the answer. So C is incorrect. And they're saying not a part of audit plan. So if you have done SA 300 properly, you'll pick up very clearly because these three we repeat so many times that you know what is 300. So the answer here will be C. Now, last question. The board of directors of the company wanted the auditor to certify export sales during the year for submitting to the authorities. The auditor also signs the confirmation letters to be sent to various debtors and creditors for confirming their balances as on 31/3/24. UDIN is required to be generally generated by the auditor for what? What is UDIN? Unique Documentation Identification Number. Unique Document Identification Number. So basically for every attestation services, for every certification, in order to prevent all the malpractices, in order to prevent all the fraudulent activities, Institute requires you to generate a UDIN to be placed on every document. Because then only it is like auditor only has certified it and it is not a dummy one or dubious one. Okay, so it's kind of a preventive measure for all the fraudulent practices. So both of these auditor is certifying. So export sales also is certifying plus confirmation letters also is certifying. So the answer would be for both export sales certification and confirmation certification, UDIN has to be generated. The answer is both. Okay, that is the idea. So with this, I think we have completed our discussion with all the MCQs. Now, you know it very well after looking at everything that is it really complicated or very difficult to understand? The answer is no. Okay, it's quite simple. And I think everywhere, if you look at it, case scenarios have not elongated it, like they've not made it big so that they confuse you. That has been very simplified. Scenarios explained with so much simple English and clearly understandable. And the questions also are so easily relatable, to the study that you do. So I told you in the very beginning that this time the questions are not picking on the difficult part or, where we focus and say, this is very difficult, we have to study more and all. No, they are picked up on simple elements where usually students neglect. Okay, so that is the idea. Okay, so I would say base to be very strong. If it is, the base is very strong, then this paper is easy to be managed. If you ignore the base and focused on all the, heavy parts, you'll find it difficult to answer. Okay, all right. Let's pick up the descriptive. This I'll give you a crux of everything quickly. Okay, so here we have CA Rashmi is the auditor of ABC for the financial year ending 31/3/24. Audit report was signed on 19/4. The company received on 25/4 communication from central government for an incentive of 5 crore pertaining to financial year 23/24, which was approved. It was paid to the company before the end of April. Financial statements of the company were not yet issued to the shareholders. The board of directors wished to include the incentive amount in the financial statement and requested the auditor to issue a fresh audit report. Obviously, you'll be able to relate very easily. SA 560 subsequent events. It comes as the facts known to the auditor after the issue of audit report. Then we study two situations. Those which are those which are come to known to the auditor before financial statements are issued. Second, those which are known to the auditor after financial statements are issued. So here is the situation where financial statements are not yet issued. So you have to give all the procedure with respect to that. Basically, it is not the duty of auditor, but then obviously if he feels this would change the decision of the auditor had it been known earlier, then in that case, he will come up with a fresh audit report. So that is the idea here. So out of the three discussions that we do in subsequent event, the second one. So the facts known to the auditor after the date of auditor's report, but before the financial statements are issued to the shareholders. Okay, so SA 560. Next one. Auditor cannot normally examine all the information available to them as it would be impracticable to do so, and using audit sampling will produce a solution. So samples can be selected in a manner that the representative of the population for which the sample is to be selected. That we know population and sample. Sample should be representative of the population. Which sample selection method is used in the following cases? Auditor divides the trade receivables in 3 groups and then bifurcated and then selects the percentage. So obviously it is stratified sampling. It is stratified. Auditor uses sample of 50 consecutive checks to test the checks are signed by authorized signatories rather than picking 50 single checks throughout the year. So he's picking a bulk, right? He's taking 50 consecutive checks. So he's doing block sampling or cluster sampling, whatever you call it. Okay, so types of, I think easy question. Next. PD and Company Chartered Accountants were appointed as statutory auditor of MR Limited for the financial year 23/24. MR Limited included the following clause in the appointment letter to the auditor. The auditor shall be responsible for detecting the fraud that may happen in the company during the financial year 23/24. The auditor objected the inclusion of such a clause in the appointment letter. Discuss in the scope of the light of the scope of audit. Now, I don't think so. This is something you will not be knowing. You know very well. Is it the duty of the auditor to identify frauds and report about the frauds? No. So what is the objective of the auditor? To obtain a reasonable assurance that financial statements are free from material misstatement and then to give a report on the same as per standards on auditing. Okay. However, as a secondary responsibility, we can say during the course of his audit, if he comes across fraud, will he apply additional procedures to find about the same? Yes. So your management's, stake here or what the management is telling is inappropriate because that doesn't come under the scope of audit. Correct? So you can give reference to SA 200 as objective of the auditor. Messrs PQ Limited has a turnover of 807 crore during the financial year. It has outstanding dues towards GST of 10 lakh since 2023. When inquired by the auditor, company's management informed him that they have filed an objection letter for the said with the GST department. However, no response has been received. Share the reporting responsibility under paragraph 3. I told you without CARO, question paper will not be there. You directly are going to have questions on CARO. That is the reason out of 21 clauses you study, one question 100%. Okay. So here it is regarding GST. So obviously it is going to be statutory dues. So we have clause number 7, which talks about it, where we have A, undisputed, B, disputed. Here you can see they are not okay with the demand raised. So they have filed a objection letter and has got no response from the GST. So we can say it is a disputed one. Okay. So we have to mention the nature of the the nature of the amount. Okay. And what is the amount involved? Forum where it has been pending. Okay. So it is a disputed due. So it will be reported under CARO clause 7. Okay. Part B under disputed regarding nature of the amount which has to be paid, amount involved, and also forum where it has been pending and all. Because objection is there. No, objection means you have not accepted it. Means you are going to file it for further appellate or further discussion. So it is going to be under dispute. So it is considered to be a disputed levy. Okay, so it comes under B. CAB was the auditor of Star Limited. He wanted to ensure that company has correctly reconciled its bank account and also wanted to understand whether and how far the internal control system was operating in the company. What kind of test of control was CAB performing? What are the other procedures that can be applied when undertaking test of control? I'll tell you a very simple idea about this. If you have understood the auditing language, you'll be able to understand the question. But if you have really mugged up on certain areas of test of control and all, this will not make sense to you. Here, very simple thing they're telling. We study two types of procedures, test of control and test of details, compliance and substantive. In both the ways, we say techniques are the same. Inspection, observation, analytical procedure, confirmation, okay, inquiry, okay, then reperformance, recalculation. They're all the techniques that we apply to perform these procedures. So basically, they're talking about this bank reconciliation that you do. That means we're checking that whether company has reconciled the bank accounts correctly or not. That means company has already done it. So we are going to check it again whether they have done it correctly. So don't you think we are going to reperform it? Correct? So here the test of control that they have applied is reperformance. And they're asking you what are the other procedures. So you have inspection, inquiry, observation, confirmation, analytical procedures, recalculation. All of those things will be the other procedures. Correct? Then we have a very descriptive, straightforward question it is. They have given you a balance confirmation from the bank overdraft balance you have. As per the bank statement, it is 25,66,200. And from the ledger, that is the books of accounts of the client, it is 26,45,300. They're asking you to verify it. So for verification, understand the agreement with the bank, see what is the sanction limit, see how much is the drawing power, see the stock statement submitted. Okay, all of these drawing powers and all calculations appropriate or not. Stock audit conducted or not, all of those things. So your stock audit not required, it's not crossing 5 crore. However, all these basic points you have to mention. Okay, so that if you are doing verification of borrowing, I think you'll be able to handle it. Next one is Schedule 3 of the Companies Act 2013 prescribes disclosure of certain ratios as a part of additional regulatory information. Mention any 3 ratios that should be disclosed along with rules relating to disclosure of these. Mention any 3 ratios. I think this is very easy. Schedule 3, you have to give a lot of ratios like net profit ratio is there, gross profit ratio is there, return on capital employed is there, debt service coverage ratio is there. Then there are going to be multiple. You can pick up any. Debt equity ratio is there, current ratio is there. Okay, so they're asking you to mention any 3. The engagement partner of a firm of auditors is explaining to his audit term, undergoing practical training, the interrelationship between audit strategy and audit plan. Okay, so discuss the points which the engagement partner will explain in this regard. So now we know SA 300 gives a proper understanding about all this. So you have to give the reference to SA 300, tell what an audit strategy is, tell what the audit plan is, what is made first and what comes second. Is there a possibility of revising? Yes. A corresponding change in the strategy could also lead to corresponding change in the plan and vice versa. They are interdependent. They're not completely different. Okay, so basically all of that you have to mention. Which is wider, which is narrow, all of those things you have to mention. Third one, CA Amit is the auditor of LMN Limited. While conducting the audit, he wanted to analyze the different components of the internal control of the company. Identify and explain which component of internal control he is trying to understand in the following 2 cases. For this, first of all, which are the components of internal control? All of you, it has to be very quick. You should get it. Control environment, entities, RAP, control activities, correct? Monitoring, okay? So all of these things we discuss, or information system, correct? So all of these are considered to be what? Components. So here, which components are getting affected? Whether controls in LMN are operating as intended and they are modified as appropriate. So basically monitoring. So are you monitoring them? Only if you're monitoring, you'll be able to understand whether they're operating effectively and if there are changes required. So here you would mention that the component highlighted here is monitoring. Whether there exists proper segregation of duties in the company and the person responsible for recording the transaction is different from the person authorizing. So control activities. Okay, you will be able to give this answer only if you have studied the components correctly. If all the components meaning you know correctly, picking up this is going to be easy task. But yes, it is one of the areas which happens to be difficult for the students because when you're studying this part, you consider this to be difficult one as per SA 315. But I told you patience is the key to success in audit papers or law papers for that matter, theoretical papers. Patience is required. If you want to hurry up, read, complete, then you'll not get the crux. And these kind of questions you'll not be able to attempt. So when I've thought components of internal control, I've thought them in detail, point by point. I've picked up all the 5 in detail. So that a question like this, you can pick up very easily. Okay, otherwise, those who have just read it, by hearted and gone, they don't even know what is control environment. They don't even know what is entities RAP. So because of that, they would never be able to identify this. Okay. Next, B. Messrs. PK and Company Chartered Accountants are the statutory auditor of JC Limited. CA Tarun, partner of Messrs. PK and Company, was entrusted to supervise and verify inventory items as on 31/3. During the process of verification, large chunk of draft inventory sheets were accumulated, and then final inventory sheet was prepared. So a lot of papers, many papers are there, and there is one final paper which is there. The audit assistant has kept all the drafts and the final inventory sheet in the audit file. Is the approach of the audit assistant correct? Which papers, documents may not be included in the audit documentation? Now in SA 230, we study that all that is relevant for us to give an opinion on the financials, that has to be documented as a proof of evidence to be collected. Now here they're telling a large chunk. That means what happens is maybe there are different warehouses or different segments in the warehouse where each of the part you have checked it and you have a paper for everything. And finally you consolidate them and prepared one final. So idea is this final has to go in the audit file. But the thing is, these small bits which you have done the calculation, all of them, please don't go and put in the audit documentation. It cannot be so bulky. So you have to understand as an auditor, discarding all of them also is the not right approach. But yes, those papers which you believe has some kind of impact on the final audit file, where there has been some kind of, exception that you have found out, or if there has a misstatement reported there, or it has some significant matter reported, those few papers you can just take up and put it in the report. All papers not required, all elimination not required. So those which have an impact, those you can pick up. So few papers can be taken and the final sheet has to be there. So this is the way in which you do the consolidation of the documentation. All right, that is the requirement. Next. Okay, here is regarding K Limited is availing cash credit limit of 25 crore from Element Bank. So it's a bank audit, obviously now. Drawing power of the company ranged between 22 crores and 25 crores during the year. The limit availed by the company remained less than 20 crore during all the days of the financial year 23-24. So they have not crossed the range anytime. The company has not deposited any amount in the cash credit account and there has been no credits to this account during last 2 quarters. So it has been out of order for a continuous period of more than 90 days. So it will be obviously classified as an NPA. Okay, because when it talks about cash credit, out of order is what we require. Then you are statutory auditor of NP Limited, looking at use similar transaction. You directed your team members to use statistical sampling. One of the team members, Mr. Q, wants to select based on his personal experience. So he's trying to use a traditional approach and not the scientific approach. As he is not aware of the statistical sampling, you're required to explain, Mr. Q, why use of statistical sampling method is more scientific and appropriate. Okay, because it is unbiased, it includes calculation, it is calculated risk. Okay, so calculated a number. Okay, so it's based on some estimate. Okay, some calculation involved. Okay, it's not haphazardly picked up, systematically done. So obviously you can give the when we do this part of sampling, or maybe when we discuss about statistical sampling and non-statistical, traditional and non-traditional approach, we understand why statistical sampling is much better than traditional method. There we have this discussion done. EFG Limited has appointed Messrs. M&N Company Chartered Accountants as statutory auditor for the year 24-25. CA and the engagement partner completed his risk assessment procedure. However, he is concerned about management of human resource to be employed to conduct the audit. For this purpose, he wants to establish overall audit strategy for setting up scope, timing, and direction of the audit. Describe how the process of establishment of overall audit strategy. I think this is given very straightforward. So how you require what type of people, competence, capability, the number of people, okay, what kind of skill set you require. Okay, all of these things we have said it in detail for audit strategy. So when we pick up every single item of audit strategy, okay, that time we discuss about the scope, timing, and direction. And then we pick that how you have to allocate the human resource. So it's a descriptive question. I think you can manage this. Obviously, remembering theory becomes difficult here. I do agree. But if you're able to recollect, good one. Okay. Then here there's a question regarding capitalization. So dismantling cost can be capitalized or not. So when you're buying a new asset in the place of the old one, where compulsory old one has to be dismantled, then the dismantling cost which is incurred, will it be capitalized? The answer is yes. So everything that is required to put the asset to the condition, okay, where it is required for it to come into the condition for the purpose of its usage, everything will get capitalized. Okay, so they are telling the auditor in the process of verifying the cost towards addition to the property, plant, equipment. What should be accounting treatment of the amount spent on dismantling of the old plant in the financial statement? So everything that is expended to put the asset to its condition so that it is put to use, okay, that has to be capitalized. So dismantling here will be capitalized. Okay, last few ones are remaining now. CA Ayush has recently qualified and has joined a CA firm. On going through various audit reports, he observed that different phrases were used to express unmodified opinion on the financial statement. On inquiring with the senior, he got to know that all the phrases can be regarded as being equivalent. Which phrases are appropriate and which phrases are inappropriate when offering unmodified opinion. So here you have to give reference to SA 700, forming an opinion and reporting on the financial statements. Their unmodified opinion means a true and fair view. So depending upon the type of frameworks, fair presentation framework and compliance framework, you have to understand the language like true and fair or present truly and fairly. Or for compliance, they are prepared in accordance with the applicable financial reporting framework. So true and fair or presented fairly will be the language for fair presentation framework. And they're prepared in accordance with applicable financial reporting framework will be for what? Compliance framework. When we do SA 700, we do it in detail. Okay. So this should not go difficult depending upon type of framework. You have appointed as the auditor of cooperative society. During the audit course of the audit, you have noticed some serious irregularity in the working of the society. Okay, enumerate those special matters for reporting to the registrar. Okay, like personal profiteering is there, fraudulent reporting is there. Okay, improper use of the funds. All of these we have those ideas. In that cases, we are going to report about this to the registrar. Again, a theory question, straightforward. Messrs. PP and Company, a firm of chartered accountant, has been auditing the books of accounts of Kali Limited for the past 3 years. Company has recently made some major changes in its business policy. While planning to start the audit of 4th year, that is the financial year 24-25, audit manager of the firm, as per the routine practice, handed over the previous year's audit program as it is to audit team with instruction to adhere unfailingly to the said audit program. Evaluate the decision. Obviously wrong. When there is going to be a significant change in the policies and the business structure, the old audit program will not be helpful. So obviously he has to study the new environment, and there has to be adequate changes made to the audit program. So there has to be updated, new drafted audit program for the same. Okay. So the attitude of the manager is not correct here. Okay. Because see here the use of the same audit program is not going to work because things are changing. So because of that same audit program for all the audits is not going to help. And the changing scenario also it will not work, no, because policies have undergone a change, business has undergone a change. Okay. The management of D Limited have engaged in actuary expert to ascertain actuarial valuation of gratuity for provision to be made in the accounts. As an auditor of D Limited, you plan to use the report of the expert as an audit evidence for ascertaining appropriate valuation of the provision. As an auditor, what will you do to evaluate the competence, capability, and objectivity, and an understanding of the work of the actuary expert who has carried out actuarial valuation of gratuity? Now, what is this? Don't we think we have done this in detail to understand the competence, capability, the kind of work he has used, okay, the source of the work, okay, his competence, okay, whether the work used is adequate, appropriate. So this is using the work of management expert, SA 500, audit evidence. Okay, in the last part of audit evidence, we discussed about using management expert. So here he's a management expert because management has appointed him. Okay, so he's a management expert. We are trying to use his work as a part of our audit evidence. So before that, we have some requirements as per SA 500, which we have to fulfill. Okay, so those if we are able to do, then are we allowed to use it? Yes. But ultimately, we only will be responsible for our opinion. Z and Associates are the auditors of Realton Limited, an export-oriented unit which specializes in manufacturing oil extraction plants. Since many complex processes are involved, they are digitalizing their operation. They are restructuring their business models, which are driven by technology. Since most of the operation of the company are automated, Z and Associates are planning to do digital audit. Explain the use. So this is the advantages of digital audit. Straightforward question. Okay, here Mr. J is an articled clerk with a big chartered accountants firm. See, all the story beginning, no, they only make it to create a kind of fuss in your mind, oh, what kind of question is coming up. But trust me, at the end, you should have patience to read the last line in the audit paper. Because ultimately, when you look at the last line, the question will be something that you didn't require the story also about. So in audit paper, when you're reading the question, you should be completely patient till you read the last point. Never go in haste and start writing any answer. Because last point will be such a straightforward question that you realize, oh, the entire story was only made up. Okay, so not most of the time in audit, it's like that. The starting story just to make it all, very decorative. It's like that. Mr. J is an articled clerk with a big chartered accountants firm. He's a part of engagement team which is conducting the audit of a company for the first time. They are assigned with the work of preparing draft audit engagement letter. Mr. J is not sure of how to do this work. See, I told you all stories given. Now they're telling, explain what is engagement letter. So SA 210 gives you what is engagement letter and then what are its contents. Tell me, do you require the story for the last point? No. So what is engagement letter 210 tells you? And also 210 tells you the contents. Auditor responsibility, management responsibility, all of those things that you have to write. Then sixth one. You are auditor of Plus Bank Limited. The bank has made following provisions. you are required to identify the provisions and contingencies of the bank. So you have to verify that all of these things have been done as per the RBI prudential norms. Okay, so provisioning norms have to be adequate. That you have to check. Again, it's a descriptive one. So here the question is regarding, while reviewing internal control, he observed that company has entered into many transactions with firms in which directors are interested. The company specified procedures which bypass such transaction. CA Vasu considered it significant deficiency. Okay, over related party transaction. So it is regarding SA 265, communicating deficiencies in the internal control with the management and TCWG. So what is meant by deficiency, we know. Either the control required to be preventing, detecting, and correcting is not there only, or if it is there, it is not operating effectively. Both are considered to be what? Deficiency. Whether significant deficiency committed to CO is a yes, obviously. So you have to identify first their deficiency, then understand their significant and connect it to the financial statements. If then communicate to the management and TCWG. So the appropriateness of communication as per 265. CAP is a professional accountant in service. In terms of employment and professional relationship with the employer, he has to alert to the possible inadvertent disclosure of information outside the employee's organization. However, in the view of disclosure required by law, CAP had to divulge the information and document as evidence in the course of legal proceeding, whether CAP has violated any fundamental principle. So one of the fundamental principle is confidentiality, correct? So now here, we know confidentiality can be breached only in two situations. One, permitted by the client. Second, required by law. So it is required by law. So is he violating confidentiality? No. Then, during the audit of accounts for the year ended 31/3, the auditor of FD Limited wanted confirmation from trade receivables. So SA 505 external confirmation, which was outstanding for more than 6 months, amounting to 4,25,000. The auditor sent confirmation letters to the party requesting them to respond directly to him whether or not they agree with the amount outstanding. So you have to reply whether you agree or you disagree. The trade receivable confirmed to the auditors of FD Limited that they were required to pay an amount of 4,20,000 to FD Limited as per their books of accounts. So basically, there has been an exception in this amount. Okay, the reply and the books are not matching. State and explain the type of confirmation. Your type of confirmation is a positive confirmation request because you are required to get a reply from them whether they agree or disagree. So in any way, if they have to reply, it is a positive confirmation. And the course of action that he should take on the confirmation received. So once he receives the confirmation, he realized there's an exception. Exception means it is mismatched. So then he has to have a discussion with management and where appropriate TCWG and basically try to obtain more audit evidences based on that to give a conclusion whether it is having any impact on the opinion that he has to give. So further investigation will be taken up. P Financial Services Limited is a leasing and hire purchase company. So it is about special audit now. You as an auditor of PFSL are in the process of examining finance lease agreement executed by them for the equipment given on lease. Which point shall be noted by you while examining a particular finance lease agreement entered into? So obviously here it is regarding the very simple concepts of operating in finance lease. They have picked up finance lease. We do this as a part of special audits, audit of hire purchase and leasing companies. I think it's manageable. All right. So obviously after this discussion, I really don't believe or I don't consider this to be something that is really difficult. Okay. So I'm very sure that if you have done a decent preparation of this subject, then it is not going to be a difficult one. Okay. So I just have, if you have any queries, you can post it so that I can reply back to it. Just give me 1 second if I'm not able to get in touch. All right. So I think this is it. I don't see any more queries coming up here. Okay. So, all right. So with this, we will stop our discussion here. Okay, and I hope this entire discussion has been very helpful to all of you. Okay, and I wish you all the best for the remaining papers. Okay, and as always, see that the preparation is always 100%. Okay, this is a solid indicator that optional preparation is not the key. All right, thank you.